Hello, this is Vance, and this is Monday, January the 9th, 2017. And these are the CL trades for today using the slow hand method for price action. Got a bit of a cold today. It's kind of changed weather. So over the weekend, it came down with it. But so it's going to be a little short today. Well, it's got a bit of a, like I said, a bit of a cold. Anyway, overnight high was 53.83 right at the open, and then we had this decline until this morning. And so right about 8 o'clock, this is really an unbroken move down from the overnight. And then from there, price kind of fell into this channel. You had the double top, a little bit lower, double tops again, a little lower. And really, you really have to think this is, going short. This is second entry short right here as it comes back to the top of this channel, or the top of this line. And then from then on, you got to wait to see if there's going to be a break. And the fact of the matter is the price goes down lower. It does come back on a strong bar. You wait and see on this one, and then it turns around immediately. So by the time you get this, you got to be thinking that price is going to be lower, and really think of taking shorts until such time as it stops coming back. And really what happened is that we didn't get that the rest of the day. So you can see that anytime price came migrating back to the top of this channel, it kind of resisted. So you really have to short this, like any reason to get short. Now, yes, you be conscious of where your stop is above the, you can't make it to this high. So you have to try to limit in near the top of this trend channel, and you have to, at the same time, look for targets that are going to be either measured moves or the bottom of the double bottoms, but you didn't get many of these. In other words, when price did come back, it didn't afford you enough room once the bar closed to get to the bottom. So you really have to assume that, it's a fairly narrow range too, by the way. Narrow from the standpoint is when the pullbacks happen, it's about 25 ticks. So you can see all the way through here, we're talking 15, this is a 15 ticks box. You can see right through here, it's only 15 ticks. That way, anytime price comes back, you really have to limit in. You have to put your limit in order next to or very close to these tops. And in other words, your 15 tick stop has to be above where the area is. And so anytime price comes back, it's a real leap of, not a leap of faith, but you really have to recognize the fact that if price is breaking down here, pulls back and it breaks down here, you got to think that anytime it comes close to this top of this channel, you're going to have to sell. And so you like to look for second entry shorts, but sometimes you don't get them. This is a second entry short here, but when your target is away from where the EMA, where's your bottom? Your target is down here, and it does make it, but it pulls back before it does. So if you're trying to, what are you looking for? Here's a second entry long here, but it's not a very good setup. You might want to try to trade the SI channel if you have room, but it really doesn't afford you a lot of room, especially when this is slowly moving its way down and then it pops up. Now, why did I look at this trade? I looked at this trade because of the fact that this is 11.15 and this is almost 12.06. So from here, say call 11.09 on this bar here to here is 12.06. It really is a fairly tight range. It's only about 20 ticks for almost an hour. So my thinking is that because price can't go down, there's a couple of dojis in here. It looks like price is can't go down, can't go up. And so I'm thinking that it should pull back at some point in time. We get a fairly strong bar, and it just completes. Depending where you got it, it just makes us 15 ticks until it turns back down. And here we have a second entry short. So, anytime price got up to this channel, you were having to look at taking it short. So here's a second entry short here. First entry pullback, second entry short. This was a second entry long, but this failed. First entry pulls back, second entry long right here. It's a failed second entry long that really turned into a second entry short. Price gets down to this level. Okay, you can say this is a first entry. This is really the second entry, but look how strong that bar bounced out of here. Where do you get in on that? If you limit it in, if you put your buy order here, it didn't quite give you your 15 ticks until it got to the other side. And then when it moves its way up here, here's another second entry short. Not a great bar, and your target is below the daily low. It has to be below. Now, is it a reasonable trade? It's a reasonable trade considering that price is moving its way down. It might not you might not get your 15 ticks immediately, but it does work its way lower. And as you can see here, you have lower highs throughout here and lower lows throughout here. Lower low, this is the lower low here, same lower low here, lower high, lower high, lower high, lower high. So, I mean, you have to be selling these tops and, like waiting until it gets to this area and then selling on that. Like I said, the only reason I considered this trade here was because it was stacking up for so long. And finally, you have a first entry, second entry, fairly strong bar. But even at that, it didn't really make it to the other side. So it didn't facilitate you getting up to the other side. Not quite. You had to really kind of limit in. So that's what it was for most of the day. It's challenging if you can't think counter trend. You got to think of, if you see the pattern, you see this slow channel with these pullbacks all the way down to the bottom of this channel. And even right now, this is, the market's already open. This is, at 6 o'clock. So it's just after 6 p.m. Eastern Standard Time. So you can see this is really a classic tale of trending down and to try to work your way out of it. And it's tough. It's really tough because once you get your first target off, even if you went to break even, depending where you entered, you really have to limit in near these tops. You have to kind of limit in, wait for price to break up and limit in from here, a sell limit order near the tops of these. And you can see that if you did that, you were pretty much safe all the way down here. That line really respected it. This is, you could have sold off and kind of hung with it right to the bottom. So that's really what it was. There wasn't anything else, really. I mean, that's what it was. I mean, you had to limit in near the tops of this channel, and that's it, and ride it all the way down. Sometimes these days can be proved to be a little difficult to trade because anytime price bounces, as you can see, this looks like it's setting up for a range. Here's the top. Looks like a close to double top here. Price bounces down here, and especially early on, you think that maybe we're going to get a retest of these double tops up here. Doesn't happen. Keeps the lower high all the way through here. And so you just got to stop. You got to just step up to it and sell and stay with it on the way down. Okay, this is Vance. I hope that's a very short one today because I got this cold. But if you have any questions, please let me know. I'm getting more and more emails, and that's all right. I'm thinking of doing some other things too. I mean, I find that a lot of individual traders are having some challenges with the mental side of trading. And I mean, the slow line method is, you set up your rules and you follow your rules, but I find that there's a number of traders that are asking questions with regard to most traders ask questions with regard to setups. How do you set it up, the stops, so forth? And that's the mechanical aspect of it. But the self-management part, some people refer to the psychological part, is arguably way more difficult to deal with. I mean, because people are unfamiliar. People are not used to asking themselves hard questions, or, they're used to assuming that the more you learn about the market, the easier it is going to be to trade. You can pretty much learn everything you need to know about trading, physically trading the markets, is in a fairly short period of time. And when I mean by short, a few months. I mean, however, to get comfortable with trading on a day-by-day basis, trading your account or any account, that is the hard part, and that's where the psychological blocks come in. So there are a number of ways to deal with that. There's some really good books about it, but the idea is that I've found that I've got a whole history of how I've discovered this for myself, and it involves a number of things that I'm not going to discuss in a private forum, but I'm thinking of running a few, giving some videos on YouTube that are a little bit more private, for people that perhaps would want to subscribe to it. And the reason I would do that is because I really don't want my stuff, that personal aspect of it, out in the public at large. I'd like to be able to at least have an email or have some contact with these individuals, at least on an introductory level, before I feel comfortable with sharing some of these things that I've learned, only because they're quite personal, some of these, and I don't want to be. I don't want it all over YouTube. I'm not or Facebook or whatever else. I would rather just share them in a more private forum. So. That's a project that I'm working on, and I'm really not sure how to present it as of yet. I've consulted with a couple of people already of how to set this up, but rest assured, if you want to participate in that, if I'm pretty open to everybody, but it's not going to be anonymous. I'm going to request a little bit of information from anyone that would like to participate, particularly if they're nothing any earth-shattering, whether you're trading, that kind of stuff, like information in that regard, and that sort of thing. It's not just going to be like haphazard, willy-nilly for everybody that just shows up. I don't want that. I've had individuals that have been kind of over the last couple of months, ever since I've been back on here, I've had a number of individuals who have contacted me, and I assume that they're trading, but some of the questions and some of the things that they're asking is that they evidently don't have a lot of experience, and I'm not interested in really. I mean, I can point some individuals who are beginning to trade or want to learn how to trade in the right direction, but some of the more sophisticated aspects of trading have to be reserved for individuals who have actually have their own accounts and are actually trading. It's not for beginners, and so that's really the reason for being a little bit more exclusive with this. What I'm working on, and at the very least, I'm gonna have to have your email if you have an interest. And so, get in touch with me. My email is slowhandmethod@gmail.com. Yeah, that's my email. So shoot me an email. Say that you'd like to be part of. I don't even know I can call it that yet. The new project. Let's call it the new. It's going to deal with. Just a minute. Excuse me. I had to sneeze there for a second. The new project. Send me an email. I'll give you some of the details. It's just going to be a one pager, and you can decide whether you want to participate or not. And so. Let me know. This is Vance. Bye for now.